There are no shortcuts to building wealth today. It takes time, effort, sacrifice, and diversification. But today, diversification means something different than it did in the past. You deserve a more secure way to protect and grow your wealth. At Delta Harbour, we take this to heart. Our mission is to help by inviting you to add physical gold and silver to your wealth strategy. Book a free consultation today and let us show you how to protect and grow your wealth through the ownership of physical gold and silver. Let us show you the Delta difference. Hey everybody, welcome once again to Hard Money for this week. Good to have you along. Of course, the boss, Darren Long, is here. John Scholes as well. Good you've joined us. We were spending the last few minutes before we came to air, Darren, thinking about what are we going to title this show? Let me think. How about It's About to Hit the Fan? We figured, okay, that's basic. People understand what that means, and we're going to dig deeper into that. Exactly why we've called the show that this week. But in the meantime, you want to reach out anytime to Darren and the guys, deltaharbor.com, Harbor with a U, because this investment, all about you, deltaharbor.com. The YouTube channel is youtube.com/deltaharbor and 1-888-335-8645. If you are ready to get into precious metals of the physical sort, or you're thinking, okay, guys, I've heard your show for the last half a year. I'm still interested. I still want to educate a little more. How do I do that? Make a phone call, talk to Darren, talk to Rob, talk to Roy, talk to the guys, talk to anybody in that office who will educate you more on getting physical metals as a portion of your investment portfolio. Going forward, you should hang on to it. Keep some in your portfolio for the rest of your life. How about that? HODL, HODL, hang on for dear life to your precious metals is what you should be doing. But, you know, Darren, it's funny. Every time we talk about stuff on this show, it seems like we're discussing things. We're ahead of the curve. We are holding court week to week. And then you hear about it on the chatter online and on mainstream media. So must make you feel pretty proud about that one, huh?
Well, John, it does in some regards, certainly to those that have taken upon themselves to research and do their due diligence.
Yep.
As far as precious metals are concerned, for sure, because they're owners. They're already in it. They understand that balance is key, that diversification is key. And for those that are listening to the show and still thinking about it or new to this, there is some certain topics that we've been discussing over the last few months that have come out now in the mainstream media. We talked about inflation so long ago and where it was impacting us and how we could see it coming. And of course, politically speaking, they called it transitory. The central banks around the world were saying, no, don't worry, inflation is not a problem yet. And it is. It's now a real problem. And again, it's a balancing act, because as we will progress through this show this week, John, there is a really, really sharp knife being dug into the skin of two sides of an argument here, and nobody knows which one to stand on. Do we raise rates to cure inflation because it's a problem?
Yeah.
Or do we keep rates low to continue to protect the housing markets, which here in Canada is a huge part of our economy? And we'll talk a little bit later in the show about an article from Better Dwelling this week and a few other articles. But real estate has become a thorn in my side, because just too many people are falling for this speculative game, and it's getting to the point now where it's ridiculous, and that is certainly a problem. So we don't know what's going to happen, but I do think that it is a prudent decision for people to do their due diligence and think about the ownership of things like gold, silver, collectibles, and other types of hard assets, because it makes sense in this day and age to have something that's tangible. It makes sense not to put all your eggs in the paper basket of investments like so many of us have done. But this week was a great week, and sure, it feels great to know that we were right. We've been ahead of the curve in stagflation talk and inflation talk and real estate bubble talk. And yeah, of course, there's an added advantage to being ahead of that curve, John. People come to you expecting to know these things. Gold this week, in terms of where it's at right now as we tape the show on Friday, sitting around the 1750 mark, 1760 mark, and it's just off of its high. This morning we came in yesterday during the Thursday trading day. It got up over 1,800 an ounce, and gold and silver 23 an ounce this week. Silver sitting up around 23.50. It's up around, give or take, just off around 3% for the week, while gold's up around one and a bit for the week. So it's been a good week. And you know, gold gains happened because there's been consistent talk of this persistent high inflation. So we've seen it happen. Jobless claims fell a little bit in the US, the largest job economy in the world, and it did relatively nothing as fears continue to pile up that we are heading beyond transitory inflation into long-term inflation. So gold started to rise. And of course, the central bankers know that when gold starts to rise, it means that people are flocking to safe haven assets. So they do their best to try and quell that uncertainty by keeping gold in check. And they can only do so much, John. When the average mainstream investor decides that they want to own gold and silver, that's when we see the real fireworks begin. So gold rose to the highest in a month as investors did, in fact, seek that safe haven. And that stubbornly high inflation is going nowhere. The U.S. Consumer Price Index this week, huge report. It rose again in September by more than forecast, which means it's resuming a faster pace of growth and underscoring the persistent inflationary pressures in the economy. The yield on 10-year treasuries fell after an initial increase following the data released on this past Wednesday, and it boosted the demand for non-interest-bearing bullion. Listen, real interest rates fell, and that supported gold. End of story, and that's what we're expecting. There is this perception in the market that inflation could be here to stay now, and we're seeing it translate into the data. China's problems that we talked about a couple of weeks ago with Evergrande and their housing problems, those are starting to get even bigger than we thought. And what we call China's factory gate, now prices grew at a fastest pace in almost 26 years in September, adding to global inflation risks. And there's no sign of it if it's stopping anytime soon. This is going to be a problem. We saw last year with respect to stimulus, and when money increases in terms of printing and the amount that gets printed, we saw that bullion goes higher in price, and the effects of inflation are no different. They have people going to the safe haven assets, and this is nothing new. So a big welcome to all of our clients. Popular products of the week: 100-ounce silver bars. Who would have thought? 100-ounce silver bars were the product of the week, John, and not just any Royal Canadian Mint 100-ounce silver bars. We have a Sauga in stock as well. And so if you are paying attention to this show and listening, also want to talk about the 10-ounce contest. Go to the website, get a 30-minute consultation, sign up for it, attend that meeting. You're entered into the contest for a 10-ounce silver bar. You can do that on our website. And all things being equal, John, it was a busy week, but a great week to be in gold and silver.
Again, online, guys, deltaharbor.com, deltaharbor.com, harbor with a U, of course, because this investment's about you. And it's also Canada. So there you go as well. 1-888-335-8645. I know, Darren, a little later in the show, we're going to get to talk to people about exactly how to open up this portfolio, but that's coming. But a lot of the news we talk about on the show it's the old, America sneezes, we get sick. So I know you look south of the border for a lot of that stuff, and China as well. I know that's been on your in your news brief in the last few weeks as well, right?
Yep, it has been. Both topics are certainly something we should discuss today. Yep. One of the major topics that goes hand in hand with this inflationary talk are supply chain shortages, John. So when we do come back from break, I certainly do want to talk about supply chain shortages and what that means to inflationary pressures and how it all transacts and why it could potentially push gold through the roof. Ultimately, right now, as we'll discuss on the show, all of the various things we need, the tangible variables that we need to see gold go higher, are all in place. The same for silver, and it is only a matter of time. So I am blessed to say that we still have a window open for opportunity for both gold and silver, for buyers to get into this market while they still can, before we see this get to a much higher point. So I want people to get into this market. The first thing we do when we come back, we'll talk the contest, we'll talk about how to open up an account, and we'll talk supply chain shortages for sure.
Awesome. Lots to go. So stick around for it. In the meantime, educate yourself, open up account, do whatever you got to do. Due diligence is what it's all about when it comes to this part of your portfolio. And Delta Harbour, really the place to go. deltaharbor.com, 1-888-335-8645. We'll continue just getting warmed up on this edition of Hard Money right here on Sauga 960. All right, welcome back. Hard Money. John Scholes here, as always. Darren Long alongside and educating you, opening up your eyes to this part of your portfolio, which may be dormant and non-existent for that matter. It may be time to explore your options when it comes to the physical metals of gold and silver. And we're talking physical hard assets, the ones you can hang on to and drop in your foot, all that stuff. physical metals in the form of gold and silver is what Delta Harbour does. DeltaHarbour.com, 1-888-335-8645. But I know you want to carry on with some more news of the week and other stuff, Darren, how to invest in this in these assets. But as you mentioned, the contest off the top, which is still going on, but time is ticking. How do we get advantage of that?
Well, basically, John, you go over to the website, you sign up for a free consultation. It can be anywhere from 5, 10, 15, 20. We call them 30-minute consultations. Usually we take up about 30 minutes of time, discussion and answering questions. And if you sign up for one and attend that, you'll be entered for free for a 10-ounce silver bar. And ultimately, that's what we're doing. We're trying to support existing clients. They may be part of this contest if they like, and new clients, those that are listening to the show that are thinking and hearing about all the topics we're discussing and deciding maybe that gold and silver might be right for them. Simply by signing up, it's a great way to start your portfolio. And it's a 10-ounce bar of silver that we're giving away, a Royal Canadian Mint 10-ounce silver bar. And they are a beautiful bar and a great way to start your investment in this arena.
Again, 1-888-335-8645 to take advantage, deltaharbor.com. Again, off the top of the show, Darren, I mentioned that quite often on this show because of you and your research and your notes that you and Rob put together before the show. You guys are quite often ahead of the curve when it comes to news. We talked about inflation. We've talked about stagflation. And now we're going to talk about supply chain deficits. This is actually a very scary topic. And I know it's heavily talked about in the automotive sector, but give me some details of what you found out for this week.
Well, the main question is, should gold and silver, as it relates to our arenas of gold and silver, should investors care about supply chain shortages? And the answer to this for me is threefold. Gold, to a lesser extent, silver as well, are safe haven assets, John. And as these crises of supply chain shortages and shortages in general become more extreme, investors turn to gold, which leads to the second point, which is to say that gold and silver serve as portfolio diversifiers. Most importantly, as supply chain issues wreak havoc on the standard traditional equity markets, gold and silver tend to hold their value and provide stability in the portfolio. So if we look at gold and silver, they provide an inflation hedge for the rising prices that will ensue as the supply chain crunch continues. So yes, it is going to be a problem. And certainly, as we've discussed, above the large retailers are finding solutions to the shipping problems by chartering and other solutions that they can put in place to try and get the supply chain to continue to flow. However, it's going to come at a much higher cost. So these supply chain shortages lead to inflation, and this is going to be passed on to the consumer. Eventually, as things become more expensive, we tend to get a little more grumpy about spending our money. We don't spend as freely, and disposable income doesn't come out as quickly as we thought. And let's face it, John, we thought that we'd be out of COVID by now. We thought, hey, this is the end of this pandemic. We're nowhere near it. I mean, this is going to live with us for a much longer than we thought. This big, huge release of pressure, so to speak, that had been building up over the last year with pent-up savings and things, it's gone. It's been spent for the most part. And if people aren't concerned, they should be. This is a broken chain. And ultimately, we think that there is a historical example of this back in the 1970s. And we used it as reference last week when we discussed what happened in the 70s to gold and silver. And we think that this supply chain crunch could be much worse than the oil crunch of the 1970s. And you mentioned automotive, John. Anyone that has bought a new or used car in the last year has faced higher prices and longer wait times for delivery. This is all because of this very small but essential semiconductor, which is in short supply worldwide, more commonly referred to as the chip, and the shortage, first deemed to be a short-term supply bottleneck, is now expected to run well into 2022, maybe even 2023. So automakers have had to reduce output by about an estimated 11 million vehicles, almost 12 million vehicles in North America this year. And 8.5 is what they're expecting will be the reduction next year in 2022. And this is going to cost them around, give or take, about $400 billion in revenue. So this supply chain crunch is a huge disruption to the GDP and to our otherwise very spend heavy economy. And the main catalyst for the shortage has definitely been COVID-19 related. The global shutdowns caused production disruptions and basically all kinds of supply chain disruptions. Meanwhile, automakers slashed their orders for semiconductors as this global demand for cars was slowing. So it was a perfect storm. The demand for electronics was skyrocketing, and this pushed production towards electronics instead of automotive. And the demand was stronger in the summer of 2020 than anticipated, which against already lower inventories deepened the shortage. So this is ultimately a huge problem, and this does relate to our wealth because it will turn the markets. These are the types of things that add fuel to the fire, so to speak, John. So I expect this to definitely have an impact on the overall economy, and this is why people are seeking out the safe havens of gold and silver.
Yeah, it's interesting too, because I have a neighbor just down the street who works at a very large Toyota dealership, and we were talking about exactly that. I mean, there's no deals to be had now. There's very few discounts. There's no cars available. You're ordering 3, 4, 5, 7 months in advance for a basic four-door car. And I said, "How about your used cars?" He goes, "We have eight cars left on the lot. That's all they have. You can't even get used cars." And the sidebar of all this is the semiconductor slash chip shortage. What is in those chips? Silver. There's always silver in that stuff. And this whole industry, it's based on that. So again, the supply chain and supply demand for silver is going to go up. So again, back to what you do, is a good time to get on it for sure. But this continues on, you think, right?
Yeah, demand will continue to exceed supply for sure. And I would say to consumers right now, beware the holiday rush. Because this is going to put tremendous pressure on premiums. If you haven't already started your holiday shopping, get it out of the way now. Little tidbit there that really has nothing to do too much with gold and silver per se, but I do believe it is going to, as you say, impact indirectly the silver and gold markets. And I ultimately think that this is something we need to be aware of, because going into the new year, as we start to scramble, people do need these things. These are not like automobiles, for example, are things we need. We need to replace an automobile. We don't do a lot of disposable buying, i.e. we don't do, the average person isn't going out and buying a new Corvette or Porsche. They're going out to buy a new domestic or foreign vehicle that's in their price range. And those that were in the average 30,000 to 40,000 range are now in the 35 to 45,000 range. Right. Another example, we drive, among other vehicles in our family, Infinities. Love the brand. And to replace the vehicle, we are at the end of a 4-year lease on one of our vehicles, and we're going to be buying a new Infinity. The cost per month on the rollover is going to be at least 100 to 150 more per month. And there's nothing we can do about it except for put more money down if we want to keep that cost lower. Add more fuel to this fire. The vehicle we currently have has low mileage, has less than 40,000 kilometers on a 4-year vehicle. So ultimately, the buyback value, or the buyout value, which is going to be roughly 29,000, it pays for us to buy out the vehicle and then to sell the vehicle if we want to get rid of it, because we'll net $7,000, $8,000, $9,000. So it's an easy money. And so lots of people are doing that. And yes, that's going to impact the economy overall. And as that slows, people are going to find ways to use less and less of the new things and more of the old things. Recycle, reduce, reuse to save some money. So when we come back, we got to get gold and silver into our portfolios, John. We got to talk about the reasons why gold and silver are going to be much higher, and let's talk more about what happened in the 1970s. It's a historical reference. It gives us something to say, hey, what can we expect to happen going forward?
And we'll do that after a short break here. DeltaHarbor.com, 1-888-335-8645. We'll continue. Hard Money, Sauga 960. And welcome back to Hard Money. John Scholes here. Darren Long, as always, we are giving you the news. We are updating you on what's happening in your world as far as things you need in everyday life, and part of your portfolio, which you may not have opened up and ventured down, would be that of hard assets and precious metals in the form of gold and silver. And we're going to show you how to get started on that. It's really simple, how to educate, do your due diligence before you dip your toe in the waters of these hard metals. But that's what Darren and the guys are here for, right? Is to educate you and open up your eyes even before you make that first transaction, which I'm sure you'll want to get in on. If you've never done it, if you have a portfolio with Delta Harbor, welcome back. Water's warm. Come on in. As you know, and continue to do what you're doing. 1-888-335-8645, deltaharbor.com. We left off, Darren, talking about this, and this has been all over the news, even though you were talking about it weeks ago, this holiday rush and goods that just won't be available for your family. It goes as far down as the kids, right? Stuff for under the tree. You better start shopping now. And I'm thinking, kill two birds with one stone. Get your kids a 10-ounce silver bar, shove that in the old stocking, and you got yourself. That's available. Physical metals you could buy for your kids and get them started on a little account with Delta Harbor, right? But I know you got lots more to talk about, right? But how do we go about doing that, pal?
Well, it's very simple, John. If people want to start by using the website, deltaharbor.com, they can. That's a great place to start and get educated. You can look at our product section so you can actually see the bar and coin types that we offer, and you can take home delivery. Set up an account, open it up, do the 30-minute consultation because you get entered for free into the contest for the 10-ounce bar, of course. And then once your account is funded, you will have an online portal, and you just give us a call. We'll make a purchase, gold, silver, maybe both, and it gets sent home. That's the direct delivery method. If that product is not safe or you feel that it's unsafe to take it home, we offer storage accounts where you can put it into a vault in your name, visit your product when you want to. You'll get bar and serial numbers of the bars. It's segregated and allocated to you, so it's a product that's in your name. It's very inexpensive to store gold and silver, and you can make changes by phone. So you increase your liquidity, increase the chances of catching those movements in the market when it does come time to sell. You can set up an account for you, set up an account for the children, set up a corporate account. There's all kinds of options in storage. And in a minute, we're going to talk about the awesome option of registered accounts, putting gold and silver into your TFSA RSPs, RIFs, lifts, your liras. Take that pension money, take a piece of it, think about it, do your due diligence, look for ways to increase your diversification in your wealth. And registered accounts, we can obviously get gold and silver into TFSAs, RSPs. We're going to talk about that in a minute. Liras, pension money, spousal RSPs, start an RESP for the kids. John, you said about the Christmas gifts or the holiday season gifts for the kids. You can start an RESP, put a few $100s into those accounts every month if you like, and build up their holdings in silver and gold. What a way to go. Just a great option to do that. We can finance metals. We can finance up to 80% of your purchase, give you a tremendous bang for your buck, really put that money to work for you, get a lot more metal for your dollar. That option is something we call collateralized finance, and we'd be happy to talk about that. And John, all of these options can be started by using that consultation process on our website, in which if you do sign up for a consultation, 30-minute consultation, it might only last 5 minutes. You'll be entered once you attend that consultation to a free 10-ounce bar giveaway contest that we will be having throughout the next month or so. And if you're the winner, we will ship that bar to you, 10-ounce bar free of charge. Those are options for you to get into the market now.
And there's that stocking stuffer we just talked about, right? But again, open to Canadian residents, and you go to deltaharbor.com to book that up and get in on that contest as well. Want to spend a little bit of time as we flash back. We've done this on the show, and it's really interesting for comparison's sake to go back to a gold and silver in the 1970s. I mean, the hair was big, the pants were bell bottom, the music was good, and gold and silver, man, tell us what happened then. It's hard to believe, actually.
Well, we're talking about earlier in the show, and in the 1970s, gold rose almost 2,400%. Silver rose almost 2,000%. Both metals ran upwards for the better part of the entire decade. And it's frustrating, John, to watch gold and silver languish sometimes when they're surrounded by major catalysts. And since, well, everything else is going up, it's more than frustrating. It's bewildering at some points in times. But perspective is everything, John. It gives us opportunity to still get into these markets at fairly low prices. And silver was here in this same place where we are right now back in the 70s and was experiencing some of the same catalysts back then as we are now. In the mid 1970s, John, inflation was starting to soar. Unemployment was very high. The U.S. was in a recession. An energy crisis had just kicked off. And these were both political and geopolitical problems that were floating around everywhere that stemmed into the late 70s. And yet from 74 to 76, the gold price fell by over 40%, stretched over a 2-year period of time, and silver followed that down. You know, a falling gold price back then with major catalysts in play at the time, many thought would push it higher than it went. Same with silver. it defied logic. It didn't happen. And this is exactly what we're seeing right now. Silver and gold are surrounded by commodities, all kinds of metal prices that have gone much, much higher, all kinds of stable food commodities, all kinds of things that have gone higher in price. And as you likely know, however, that mid 70s period was very confusing because people didn't necessarily believe recession was there. They didn't see that oil was going to go through the roof in terms of cost, and they weren't sure. They thought maybe this could be, the second coming of another boom as opposed to recession. And for investors, a lot left the market. They were uncertain about gold and silver, and that's happened. You have a lot of people. You have this stagnant pricing, and silver is often quoted as doing nothing. But the reality is silver averaged in 1976 around $4.50 an ounce.
Wow.
By the time January of 1980 hit, it was $52 an ounce. And both gold and silver jumped dramatically, and it left people behind. They weren't able to catch up.
You think that this is something you expect to happen now?
John, it's a great point because I do expect it to happen now. If that were to repeat today, starting from where we are right now, gold would have to rise to around $44,000 an ounce, and silver would have to rise to around $452 an ounce. Talk about being in the right place at the right time. Silver's $23.30 as we tape the show here on Friday, while gold is sitting at a low price of $17.70-ish.
Yeah. You always tout balance when you talk about this show. I know you're not an investor, nor do you give advice on people's portfolios, but your thoughts on how to balance it as well for individual wealth strategies. I know we got to take a break in a minute or so, but at least get the table set in that regard.
Well, have something from all of the great arenas, John. That's my piece of advice. And do keep in mind, we are not your financial planner advisors. Seek the advice of those that are experts in your life and the professionals that you trust. But keep your traditional assets and perhaps lighten the load a little bit on the ones that are not cutting it for you. You need to balance your wealth with some physical gold and silver, maybe somewhere around 10 to 25% if your net wealth strategy could be directed into it. Look for the warning signs on the wall of other investment arenas and where their cycles are at, John. Now is not a great time to bulk up on stocks. Now is not a great time to be adding low interest investments like GICs and be playing it safe, because inflation is going to eat away all your gains, meaning it'll be worth less than what you put in, even though you feel like you're getting a return. And now is not a great time to be speculating in real estate. And I think, John, after we come back from the break, let's stick on that theme. I'd like to talk about registered accounts and real estate. There's a great article out from Better Dwelling, one of the websites we follow. I'd love to share it with our listeners, talk a little bit more about why that speculative real estate money could do much better in gold and silver, physical gold and silver.
You bet. It's got to be part of our discussion, and it will be. Again, that short break coming up. We'll be back from it, so stick around. DeltaHarbor.com, Harbor with you to start investing. Get in on that contest as well by signing up for a consultation. And the phone number, 1-888-335-8645 to start your education and investment as well. We'll continue. This is Hard Money on Sauga 960. Welcome back. You're listening to Hard Money, Sauga 960, and online. You want to go to the YouTube channel, youtube.com/Delta Harbor to catch past videos. Learn more as well, because there's audio and video. You get to see us as well. I don't know if that's a good thing, but you get to see us as well. But we always talk sometime, Darren, during the show, we always cross over into real estate because, you're a real estate investor. You've always admitted that. You've got a real estate portfolio, but at the same time, you've got to approach with caution, especially now. What do you mean by that?
Well, many things, John. First off, I do love real estate. It should hold a place in everybody's portfolio if you can afford it. I like raw land myself. I like to develop things. I like to do that kind of stuff. But real estate warning signs are everywhere. John, remember in Canada, at the very peak, which is spring of this year, there's no two ways about it. Spring of this year was the peak. There are some areas geographically, there are some areas which are still rising. There's no two ways about it. But if you look overall, as a moving market in general, across the board in Canada, in particular in Ontario, the spring was the peak. And we've hit it and we've come and gone. Cottage country going down in price. Houses on the market a whole lot longer than they were. Slowing bidding wars. We're not seeing as much in the way of blind auctions, only in the very hottest of central areas. And yes, lots of areas continue to see higher prices. There's no two ways about it. And it's the tail end of the last in, first to take, these people that are buying last are the first to take big hits. So this is the crowd that is buying right now that is very inexperienced. It doesn't know about how to really, maneuver around in this real estate environment. Those are going to be the first to get very heavily hurt when interest rates start to rise, because unfortunately they have nowhere to go but up, because it's the only tool we have at our disposal to quell inflation. You got supply chain crunches happening, which are adding to inflation. You've got higher demand, which is exceeding supply, again, very inflationary. And ultimately, we have so much going on right now that you cannot sit here and think to yourself that speculating in real estate is going to be a great thing moving forward. I watched the number of houses on the market that are selling for less than what they were bought for a year ago, and it's increasing. And people are starting to scatter quickly because they don't want to lose a ton. So they might have bought that house at 1.2 and hoped to resell it this summer at 1.5. And now they're finding out, okay, the peak is come and gone. They should have sold a little quicker. And ultimately 1.2 is looking more like 1.15. So I'm seeing a lot more of those houses. You've got people moving back to the core because, of course, employers who thought this was ever going to happen, they're calling people back to work. It doesn't matter if it's a hybrid model, John. People were going and buying freely in the northern reaches and the western and eastern reaches of the GTA, and then they expanded to the rural areas. Honey, want to have a little tiny cottage-like place and be on a little lake and stuff. It's great. We can work from there. We got high-speed internet. No, it's not working out so well. So we're going to move back to the core. Do we make the right decision? Well, we have mechanisms in place now also to prevent speculation. So I brought an article this week from Better Dwelling, John, that discusses this problem. And,
cool.
and one of the key components of learning what's happening is that we have to watch the data. And the data in real estate is telling us quite simply that we're in correction territory. This article from Better Dwelling is entitled Canadian Investment in Home Construction is Officially in Correction Territory. And I quote, Canadian home building is near record activity, but it appears it's hard to keep finding new money. Stats Canada is showing investment in building construction fell in August. The decline marked the fourth consecutive month, and it was due entirely to housing. Residential building construction investment dropped so fast, it's now technically in correction. And John, that just simply means seasonally adjusted building construction investment fell to a number they say in the article is around 17.7 billion in August. It's down 2% compared to a month before, which is a substantial single month drop. And StatsCan estimates this is 12.7 billion when adjusted for inflation, with a 2.6% decline over the same period. It's a lot to digest in that paragraph, but means we can expect falling home building to lead to falling home prices. And again, another warning sign that if you're speculating in real estate, John, this might not be the best time to do this.
Yeah, you've often said that, coming around the corner, you may have missed the boat in the peak times to do that. But conversely to that, often reflects to a great time to get into physical assets like gold and silver too, right? If you want to start that portfolio.
It does, and it's balanced. And like we said earlier in the show, it's as simple as just going to the website, get some product delivered to you. Open up an account, fund your account, order your product, get it sent home, store it with us, have a vault, have an account in your name. It's a whole lot of fun to be able to see your product, go and visit it, but also to have liquidity. Pick up that phone and be able to buy and sell on a phone call. Keep it very simple. You can also you can also put your money into registered accounts, which we're going to talk about in the next segment. And of course, the financing, as we said, exists. But that contest, John, it all starts with doing that half-hour consultation. And there's the 10-ounce bar. We'll hold it up nice and close to the camera.
So cool. I
love those 10-ounce bars. There's the sealed bar, vacuum sealed, gorgeous bar. They're real heavy. If you drop them, they make a real sound, my friend. And that to me is real money as it gets. And we're giving away one of those simply for signing up for those 30-minute consultations. If you attend that meeting, you'll be entered free of charge to go ahead and qualify for the 10-ounce silver bar. So all kinds of ways to get into the market, John. And what an exciting time. What an exciting opportunity. There is nothing like being part of something that's on the cusp of breaking out. Silver and gold, albeit they've had tremendous rallies over the last 15 years, we're at a precipice right now, John. We're at a cycle change. We're looking ahead. We're not seeing the same type of expected growth. We have inflationary pressures that are mounting by the day. And ultimately, I want to have some fun with my money. I want to make money. And as we talked about inflation, it's the great robber of wealth. It takes our purchasing power away, and we don't even know it. We're sleeping at night. We wake up the next morning, and boom, everything costs more. And that's happening to us across the board. So yes, it is time to diversify, John. It's time to think about ways you could be more creative with your wealth strategy. Physical gold and silver are the way to do it. And again, listen to that sound. That's real money. When it hits something, that is tangible wealth holding your hands. It's portable, and we'd like our listeners to be part of it. So getting an account open with us is very easy, John. Throw out those numbers, that website. We'll go to break. We're going to talk registered accounts when we come back.
You bet. 1-888-335-8645 is the number that Darren just mentioned. Online, deltaharbor.com, harbor with the U, deltaharbor.com. And you can watch these past programs as well, by the way, youtube.com/deltaharbor. And if you go to the website, sign up for that consultation, you have a chance to win that lovely, loud 10-ounce silver Royal Canadian Mint silver bar to get your portfolio started. So check that out as well. We'll continue. A few minutes to go. This is Hard Money on Sauga 960. All right, welcome back. Hard Money, John Scholes here. And as always, Darren Long educating you and giving you the goods and news updates about what you should be doing as far as your portfolio is concerned. Not your investors. They're not handling your portfolio, but just merely pointing out some options. And that would be the option of hard assets in the form of gold and silver. If you've not opened up an account, you want more information, educate. Simple. deltaharbor.com with a U, 1-888-335-8645. Get yourself in there for a 30-minute consultation. Might not even be 30, might be 5, might be 10 or 15, just to have a chat with Darren or a member of the team. Once you do that, you have a chance to win a 10-ounce Royal Canadian Mint silver bar. Darren, I think you had it in your hand before. You dropped it on the table. This is not paper. What does that sound like?
It is not paper, and it does sound good.
See, that ain't paper. Don't make that noise.
Real money hitting the table here. And ultimately, yes, John, that contest is open to everyone, including existing clients in Canada only. And it's a chance to win a 10-ounce bar. And all they have to do is hit that consultation and attend the consultation. They'll be entered free of charge for that. And yeah, John, we're excited. This has been a busy week. We got silver and gold barking at new price ranges. Gold up almost over $1,810 an ounce at one point this week. It's coming. And I'm excited because there are a lot of variables in play as we talk throughout this show, a lot of things happening. I have great expectations, but again, I'm also concerned. This economy is teetering on a change. We are looking ahead as far as we can. We're seeing the inflationary pressures creep in. This is not transitory. Mark my word. We have to address this with higher interest rates. Real estate investors, this is not an exciting time. Be prepared. Don't be the last in, because you'll be the first to get hurt. Think about ways to diversify your wealth. Think about other strategies, easier strategies. Gosh, owning a house is not easy. It's not easy to buy and flip. It's not easy to be a real estate owner. But owning gold and silver is pretty easy. And as far as I'm concerned, the last 15, 20 years have been every bit as good to me as an investor owning gold and silver as they have with my real estate.
Again, so many different ways. You want the physical item in your hands, you can do so. Make a quick purchase from Darren and the crew at Delta Harbour. You want to put it into storage. You want to do other different things, including, and some people really love this because it's literally hands off and so easy. And that would be open up or use your registered accounts. Tell me how that works, Darren, because it's good stuff.
It is. Registered accounts are exciting, John, because precious metals investors have wanted a way to hold gold and silver bullion within their RSPs and TFSAs. And up until we started this back in 2015 with our partner Questrade, this was not an option. You had paper alternatives and you really didn't have allocation. You weren't sure if the buyers were there or not. It's all kinds of red tape, but we made it easy to do. And you can put gold and silver into an RSP at TFSA. Delta Harbour offers precious metals investors the ability to own physical gold, silver, bar and coin form in all of their registered accounts. And it's easy to do. It's by far the safest and most secure way to invest in bullion. And with this method, your precious metals are fully allocated and segregated in a depository facility. And this depository is fully insured. It's located in Canada. It means that there is zero counterparty risk associated with your bullion holdings. And it's there to ensure clients receive the utmost assurance that their product is safe and secure. It's registered bullion accounts are provided in various forms, from TFSAs to RRSPs, spousal RSPs, locked-in accounts, LIRAs, RIFs, LIFs, and RESPs. We don't do them often enough, John. We care about our kids more than anything in the whole world. We want the best for them. If we're opening up our RESPs, put some physical gold and silver into them. What have you got to hurt? And not only that, do it on a monthly basis. Contribute a little bit every month. Take advantage of the rebates and what you get from the government. And you have direct access to your precious metals. It's available, and you can buy and sell this in seconds just by making a phone call. And we are there to help and support you every step of the way. It's a fun thing to do. You have an account, you have a dashboard where you can log in. And on top of all that, not only can you own gold and silver, but you can also own your traditional assets. You can buy stocks, mutual funds, you can buy bonds, you can experience other investments, and you can do it self-directed. One of the biggest eye openers I've ever been through is when I went from a non-self-directed account where I expected somebody else to be responsible for my wealth, and I went self-directed. I did that back in 2005. I still do have a partner that I use expertise, as does my family, and we rely heavily on that partner for other things that we know very little about. But I self-directed a huge chunk of my portfolio. I've never looked back. Again, this is not advice I can give to you. You have to experience yourself, do your own due diligence, but it's easy to do. And registered accounts are a ton of fun. We can receive storage confirmations. Once the account is landed, you get an inventory report sent home to you. And we do absolutely everything with you every step of the way. We hold your hand. Go and read. Recently, we helped a number of people. You can go and look at our Google feedback. There are a number of good, positive responses about people who opened up registered accounts there. And we'll be with you every step of the way. And tons of support, tons and tons of easy ways to do it. And gold, silver can all be part of that process. And you can do it in bar and coin form.
Again, Questrade, as you mentioned, great partner that you're working with there, IROC approved as well. How easy it is? It just simply set up an account and go from there?
It takes about 15 minutes to do.
Wow.
And you can use, by the way, John, you can use existing institutions. So if you're already with another bank or institution and you already have an RSP, already have a TFSA, whether it's invested in something or just sitting there in cash, you can use those accounts. We can show you every step of the way how easy it is, about 15, 20-minute process, and you can bring those funds over to your new account with Delta Harbour using Questrade portal. And of course, everything happens through Delta. We are there every step of the way, which means you get priority status with Questrade as a client. You'll get all of the different types of products that you can put into your portfolio, and all of that additional support comes free of charge. Once you've paid for your bullion, parked it into your account, the only ongoing cost is your insurance and storage, which is 1.25% of the total metal value, and it's charged on a monthly basis. You don't even know it's there. And we'll show you a way to use existing money to do that. So easy to do, John. And yes, opening up an account couldn't be any easier. And of course, if you use, as you remember, if you use the consultation on our website, the consultation option, you get entered for this incredible chance to win this incredible 10-ounce Royal Canadian Mint silver bar, free of charge, if you attend that consultation where you could be discussing how to open up a registered account.
You know, it's fascinating stuff to get into. And you mentioned a few minutes ago about, you know, a lot of people think, okay, well, I'll dump a bunch into my account and there we go, I'll leave it. But the whole concept and the idea of cost averaging, which I know you like, as you said, put a little monthly in every time. It becomes part of your routine every month, and cost averaging can really have some benefits as well when it comes to physical metals, right?
That's right. And again, that's where our expertise really shines, John, because we can talk about those options for acquisition and liquidation, and we can talk about divisibility. Why would it be smarter to have, you know, some 10-ounce silver bars and some 100-ounce silver bars versus just all 100-ounce silver bars? Why would it be smart to think about larger bars versus smaller bars? Is there a savings difference? Should I have coins versus bars? Lots of questions crop up, and we're there to support you every step of the way. And in terms of storage, a lot of people get held up on the cost of storage,
Oh,
but really the
okay.
reality is, if you had $10,000 worth of metal in your account, you're talking about less than $11 a month for storage. It's a very minimal amount. And we use your existing money if you're bringing over from another institution as the way it should be, which is to put a little bit of that into gold and silver and leave a little tiny bit on the side for your storage. So you don't have to go into your pocket and dip in for new money at all whatsoever. Couldn't be easier. And John, perfect storm where we are right now. If we recap this week's show, we've got great gold and silver pricing. We've seen higher this week, so we're getting a bit of a break. We've got that threat of inflation and stagflation well on the table. No more transitory. We talked about it first here on this show. You've got problems with gas, food, and housing. Not a great time to be buying real estate. It's kind of a perfect storm. And we've got those supply chain problems. Yeah. Please pick up and read something on that. It is going to cost our economy billions of dollars. It is going to make people hesitate to go out and spend freely because they think if I wait another year, I'll get that car or I'll get that large ticket item for a little bit less than I would now. And it drives uncertainty in the markets, John, which we all know once the gravy train stops, recession sets in. That fear and that discussion about those topics in weeks to come, I'm sure. For now, go to the safe haven, get some gold and silver in your portfolio.
Get in on that contest, a chance to win 10-ounce silver bar as well. Make the phone call 1-888-335-8645 and online to deltaharbor.com. We'll catch you next time. Hard Money on Sauga 960.